There we go. Well, it's my pleasure to introduce David Lee and David Blankman. David Lee's has a very interesting background since he's both a franchisor, a franchisee, and he's a broker dealer. And what else are you, David, in the crowdfunding space?
Yeah, so thanks for the introduction, Michael. My name's David, and I'm the founder of a company called NetShares. And NetShares is an SEC registered broker dealer that's been approved for equity crowdfunding. And so, part of our responsibility in all of this is to make sure we vet these deals before they go live. And I guess the responsibility is sort of on us to make sure that the deals that are coming through are legitimate deals. And part of the services that we provide pertains to the compliance part. But I guess what sort of puts me in a unique situation here with franchising and equity crowdfunding is that not only do we operate an SEC registered broker dealer, but I'm also a franchisee operating a multi-unit franchise down here in Texas. And I'm also a franchisor of a brand new Korean barbecue concept based here in Houston, Texas as well. So I've been involved with franchising now since 2007. I'm pretty well versed in the franchise space. But even before that, I've been in financial services. I've worked at Wells Fargo, Morgan Stanley. And so I've been in the securities business for over 25 years. And so, I'm here to help and to see, how we could help franchisors and franchisees grow through this through these new regulations that are now available through the Jobs Act and with equity crowdfunding.
Well, which would you like to talk about first? I know you guys have a very well thought out description of what the franchisor needs to do with the marketing. We could go start there, or we could talk a little bit more about the broker dealer. It's just a matter of emphasis where you guys feel comfortable going first. David Blankman, what would you like to do?
I'd like to just give a little background on myself. David
No,
Blankman,
you can't do that.
another Wall Street veteran like David Lee is. We both share the first name, so there's always confusion for that, but we usually get it straightened out. Also, I have the distinct experience, hands-on experience, in actually helping launch a startup FINRA-regulated Reg CF portal in my recent time, and also working and helping two issuers to launch. One is a Reg CF deal where I was the investor relations outreach person, and the second was a Reg A plus equity crowdfunding offering for a large real estate conglomerate in Connecticut that is getting ready to launch a Reg A plus offering for their REIT, real estate investment trust deal. So again, my interest here is to really support David at NetShares, and he welcomed me to come and present today, and also help many of our listeners to understand some of the real aspects. I mean, this is real life. I mean, like Massimo, I so much appreciated him because it's like the hands-on again, but he's been there, done that, and then share some of that with the audience, and especially the excitement I have about making this possible for franchisees and franchisors to take advantage of raising capital in this way online.
Okay, and to summarize, both of you guys very experienced in securities, understand the compliance, and David Blankman, you've had 5-6 years, or is it longer than that? In particular, in crowdfunding, so you understand. Did I get that right, or is it longer than that?
Yes, it's 5 years, and it started off with reading the Equity Crowdfunding for Dummies book. Believe it or not, they have one in 2016.
I read that book.
book. So, yeah, And so I've followed it along, and I just love it. I think it's democratizing capital formation. One of the most important things, non-accredited or just about anyone in the United States and the world can invest in shares in these franchised businesses once they start raising in this way.
Yeah, I think that's one of the attractions that you think, David, that the democratization of the investment. I wonder if you could speak a little bit to that, or
Did
not.
you want
David?
David Lee?
Sorry, I'm going to say Dave at the top and David at the bottom. Dave.
Okay.
Yeah.
Good
So I'm
enough.
sorry. What was the question again?
David and Massimo both emphasize the democratization that the Jobs Act has brought to investment in franchising restaurants and other things. And I know that's part of something that you believe in too.
Yes, I do. And I do know that there are a lot of people out there that want to invest in franchise businesses, but there's currently no access to these types of investments. And the only way you can invest in these franchises is you buy into a franchise and you invest several hundred thousands of dollars to open your own unit, or you have to know somebody that's in the industry and partner up with that person, right? And so here we get to offer these types of investment opportunities to the general public. And prior to the Jobs Act, in order for you to be eligible to invest, you had to be accredited, right? So in other words, you had to make over 200,000 a year or have $1 million net worth or more in order to participate in these types of investments. But the Jobs Act eliminated that requirement, and now anybody over 18 can invest, as little as $500, $1,000 into these private deals. And so that's what makes this really exciting for me, is being able to open up these opportunities to the general public. And that's true democracy, right?
Right. And you saw how excited Massimo was about, the restaurant insiders who just looked at the concept and got it right away, but don't have millions of dollars, right? Those are the people that you're going after,
That's right.
right? That they can just look at the concept and get excited enough. Now I know, David Blankman, you've had a lot of experience in, I'll say, encouraging that excitement,
Mm-hmm.
turning that into more than just excitement, a offering that succeeds. And I wonder if you could speak to your experience on that.
Yeah, great. Thank you. Why raise capital online under these exemptions that the Jobs Act's created? First and foremost, because I really believe the restaurant business is also become e-commerce like everything else in the world. And this is the opportunity to raise capital, in other words, sell equity or do debt offerings for just about any investor, as David said, 18 years old with employment, online 24/7, where here's the deal: eyeballs and people all over the world can see it and invest. And I talk to founders and owners of businesses a lot about this, that have been through the whole, Massimo just described it so well, the private equity raise with angel investors and VCs, term sheets sitting across waiting for checks, having the CEO's time so tied up with that process. What's wrong with getting your next 30 investors while you're sleeping tonight? Absolutely nothing at all. And so it's e-commerce investing. And again, so important, it's all of the US. And if you decide under both exemptions, Reg CF and Reg A plus, you can include worldwide investors. What kind of public crowd opportunity is this? I mean, 2 billion people? I don't know. So, but then the challenge becomes, how do you tell people and how do you attract people to see this offering during the day, 24/7, or while you're sleeping at night? And that comes down to digital marketing. And it is really most likely the most important thing. I wrote down here the top 3 things that you need to do to start the process of doing this kind of raise. And the number 1 is, and you should start doing this now, even if you're not contemplating doing a regulation crowdfunding raise, is build your social media capital. Now, this is a kind of a new term. What is social media capital? These are all your connections on LinkedIn, Facebook, Instagram, Twitter, and believe it or not, TikTok can also be a source for this. These connections and people you're friends with literally become, as I believe, truthfully, the wealth of your business moving forward. So it's social media capital that you compile the list of customers and fans that either like your restaurant or like your franchise concept, and start building a list of these contacts, and also reaching out into social media and asking friends to tell other friends, their friends, about your restaurant offering or your restaurant opportunity, be it a franchisee or a franchisor. And that is something you start now, really, seriously, because it is the future of enterprise, I think, in everything we do. The second thing that I think that we need to do, and it's very important, is either with a digital marketing agency, which we will give some referrals to if you want, or an experienced digital marketing team member on your team to prepare a marketing budget and plan that starts utilizing all these lists of customers, fans in the appropriate channels of social media outreach for advertising and making them aware of 2 things. Here's the double benefit of the fact they can come dine at your restaurant, which is new customers, right? That's a part of your marketing budget now. And secondly to that, a group of those people who are your customers can also become investors. They can bring friends into your restaurant through the incentives they might get from your contact with customers, whatever, however you decide to do that. So when you think about your marketing budget, and here's my main point on this point, is it has a double benefit. Okay, the marketing spend you do on your regular business to attract customers to your restaurant can double the effect of having a portion of those customers and their friends become investors. So it's something you do need to budget for and find a source of the person or group that can do the outreach on your behalf, or you use it with someone inside if you're an established business that can do it. The third thing that I would recommend is most important is to decide on your partners. And the partners in doing a Reg CF or a Reg A Plus equity crowdfunding offering are an attorney, legal help. Again, I mentioned your marketing agency or somebody on marketing on your team. It's a CPA, someone that can do your either compiled or audited financials, depending on what exemption you use, and then choosing the best portal and broker dealer. And I would hardly recommend that the portal you choose is a full broker dealer. There's some that are not full broker dealers. In fact, many are not full broker dealers, to help you get engaged with transfer agents, escrow agents that do the back end. It's called the back end of the deal, where the money is spent, collected, and held in escrow, and that eventually dispersed to the issuer upon achieving certain funding goals.
Okay, we're going to go. Of course, the back end is extremely important, and we're going to be hearing about experts on that later on. I want to go and follow up though with, this idea of a budget, marketing budget. That's not something that we talked about with Massimo, but he shared with us, that when he was crowdfunding for the automation, these prototypes, he was spending 23% of his raise to build those prototypes. So there was a very large marketing spend for him. What's been, Dave? Where do you see that budget for marketing for a franchisor?
Yeah, so I've seen spends of anywhere between 5 and 10%. 23% seems kind of high, but I guess the more the merrier. You know, you want as many eyeballs and you want traffic being driven to your campaign site. And you know, you also want to have a compelling campaign page to convert those convert that traffic into actual investors. And so, but you know, I'll tell you what, you know, with franchises, the beauty of crowdfunding for franchises is that in many instances, I'd say in most instances, franchise businesses already have social capital built in, right? And so, you know, if they've been doing it right, they have a customer loyalty program, they have, you know, a social media platform, and you know, all of that could be leveraged to get the word out about, you know, the fundraise that the franchise is doing. And so, you know, I think if anything, you know, we just need to leverage what's already there. And then, you know, so I think that 23%, you know, we could bring it
I hope.
down a lot
Yes,
lower than that,
we better.
utilizing existing social, the existing social capital that's already there.
Right. And the existing social capital, you're quite right. That I think is the franchisor's advantage. They've been doing that. I'll say customer or marketing, but you know, there's various levels of that. And I wonder, David Blankman, if you could speak to um, what you think is required in a good digital marketing program for a franchisor to be successful. What I know you have some ideas on the correct elements.
Yes, okay. You know, the channels are important to select according to where your fans and where your customers are residing or spending their time. One is obviously Facebook advertising, which can be very targeted to a local zip code population, age group status. The other way is to develop really good marketing content that provides outreach for your targeted audience. I guess the best thing I can do is give you an example of when I did the Reg CF raise in 2018. We were reaching out into social media to get investors to come and see our offering on the portal that we had. And so we did an ad with Mark Cuban. You can get Mark Cuban's photo off of the website where the pictures are allowed to be used, right? And we wanted the group that we sent out this ad to on Facebook to click through to see our offering. And really all you can do, and David Lee's going to handle this in this conversation or in the next one about the compliance aspect, so I won't go into that, but the ads have to be compliant. But literally all they can say is, hey, I just invested in this wonderful deal. You can too. Here's the link, right? And then we had Mark Cuban with a real grimace on his face, like something, when something happened with one of his businesses. And the caption at the bottom was, you too can now be an angel investor. And we did 600 to 800 clicks a day on that ad through Facebook. Just an example of how this can work and how it can. I'm not saying Facebook's the way. I don't know if it's the way for everyone. And in the restaurant franchise business, I think it's something to take a close look at. Maybe Twitter, maybe Instagram, maybe even TikTok, because I think a lot of really younger people who are now spending, I think, a lot of money on restaurants, especially some of the more moderately priced fast food type restaurants, can really be an effective tool. So I think that's probably the best example I can give of hands-on actually helping to do that for a Reg CF raise.
I also think it's very important to mention that before the Jobs Act was approved and went into effect, it was actually illegal for issuers, for companies to publicly advertise their investment opportunity to the general public. So, you know, before the Jobs Act, if you wanted to raise capital, you literally had to go to your Rolodex, your friends and family members, and perhaps their friends and their family members to spread the word, right? You couldn't put a Facebook ad out or an Instagram ad. It was illegal to do that. And so that's what makes this, so exciting. The Jobs Act eliminated that restriction, and it loosened those regulations. And so now you can freely advertise. I mean, there are certain things you can and can't say in your advertisement, but now you can, put ads out on Facebook. You could put a TV ad if you want to drive traffic and let people know, hey, I'm looking to open, X number of franchises. If you're interested in investing, click here. That was illegal before. Now it's legal through the Jobs Act.
Yeah, that's a really very important change, and I'm glad you mentioned that, because there'll be people in this audience who will wonder. And that was just 2014, that change happened.
Yeah, well, the Jobs Act was passed in 2012, but implemented in 2016. But yeah, it's the rules were there. They were there in place to prevent fraud, right? They
Right.
don't want
Right.
people advertising fraudulent investment opportunities, and so that's a huge game changer for the capital raising industry, if you will.
And let me just, I want to veer a little bit back then into this, because you guys have both raised questions about the ads being compliant. Isn't that's part of your role, right, Dave? As I understand it, correct me if I'm wrong, but that's the role that the broker dealer plays, making sure that there's this level of compliance with the securities on the ads. Is that right? Did I get that right?
That's correct. So, communication has to comply with, the SEC rules and regulations, or, there are certain things you can and can't say in with regards to the terms of the offering. The only place you can find that is on the actual campaign, the offering page. And so, yes, as a broker dealer, we would help you. We will help you with all of that and making sure you're compliant with those rules.
And that's an ongoing function, right?
Correct.
And it's just not a one and done. So typically, would you be working with then the chief marketing officer of a franchisor? Is that the sort of person that you'd be working with?
Yes, that's correct.
That would make sense. So, and is there anything special? I mean, I don't know, but is there anything special about the compliance that franchisors need to know about, or is it just there's nothing different for them than there is?
Yeah, so I think I think one of the important things franchisors and franchisees should know is, as Joe typed up here in this little chat box, you can't just put out a landing page to collect investor money without going through the right process, right? You have to go through either a funding portal, and there are about 75 funding portals here in the U.S., and there are about 3,500 broker dealers here in the U.S. Not every broker dealer is going to be involved or are going to want to do Reg CF capital raises, but you have to go through a funding portal or a broker dealer in order to conduct a Reg CF or a Reg A plus raise.
So these are the gatekeepers, right?
Yes, that's correct.
If you're going to do this public advertising, and you need to go through these gatekeepers and make sure that all of the, as we'll hear later on in the legal panel, that all of the sometimes very tricky conditions to make your offering legal have been made, and that's what you're doing as that broker dealer.
That's right. Yeah,
yeah,
and another point I
go
want to
ahead.
bring up too, I just want to answer this other question here from
Yeah,
Kevin regarding the website, being turned into a landing page. Now, there are two different types of
right.
portals that you could, you know, uh, put your Reg CF round through. One would be, kind of a marketplace type setting, like a Start Engine or a WeFunder, where you have aggregated, deals. If you go onto those websites, you can probably find 30 or 40 investment opportunities that you can get into. Or you can just have a single landing page specific to your company and only showcase the investment opportunity in your company, and just kind of cut out all the noise, because the last thing you want to do is spend all the marketing dollars to drive traffic to a website, and then they go there for Massimo's deal, but then they get distracted by this other deal and they end up investing in that deal instead, right? And so we can create customized through Core Connects. Actually, Core Connects would be the solution for that. We can create those customized pages that's specific to your deal.
I was,
Does that
I,
make sense?
yeah, no. To put it in the franchising terms, on franchise development, franchise sales, there's two types of approaches, digital approaches. One is to get listed on the various franchise portals, and that would be the aggregate deals, or you spend a lot of money and create your own website. Often these are distinct websites with distinct URL that features only your own, and you try and drive a lot of traffic to just your own. So I think people in franchising would understand the difference between those funding portals. Do you have do you have a preference, or do you have either of you have a thought about which franchisor would succeed better? Um, Dave Blankman?
I think the franchisees have a big opportunity here, primarily with Reg A Plus funding, which is the larger version of the funding.
Mhm.
I think
It's
you're
the other.
referring to franchisors, right, David?
Yeah,
Yeah.
franchisees would be able to for Reg A Plus, and franchisors possibly also. And I think the best way to answer your question, Mike, is to say I think the best thing is when we talk with a prospective franchisee or franchisor that wants to seriously consider this kind of capital raise, we would do a lot of listening and making sure that we would recommend the correct way to exhibit and to show the deal, as David Lee has just expressed. And then also, one of the things that I would be very helpful on is helping the issuer to build the pages on the website, regardless if it's on their own website for Reg A Plus or with a portal, which is required to be for Reg CF, is really developing, again, a marketing step of compelling, interesting, and exciting. It starts with a video. The video on the landing page needs to be less than 60 seconds if possible, but no more than 2 minutes, and really get out like Massimo did, his value proposition, boom, right away, and make it short and sweet and exciting for people. And then the close at the end, like a good TV commercial. I usually call these making your own Super Bowl commercials, so good that people they come to the game just to watch commercials, right? So we want to have that kind of quality on that, and that's one of the marketing steps. And then the pitch deck, the introductions to the team, the extent and size of the market, and then maybe pro forma financials, a 5-year pro forma financial of what we're going to do and how much money we're going to have in revenue, maybe a break-even point, are all part of that page that really needs to be concise and well crafted, so that when you get someone that you paid money through to click through and see that page, you get the highest conversion rate possible on each click through for that thing. Because with Google Analytics, we can measure all that, and we do. The portal, one of the great things about the portals is that we can measure the conversion rates and the click-through rates. And like I mentioned, the 680 click-throughs that we got with the Mark Cuban ad on Facebook, we could count that every day. So this is another very important aspect of the marketing piece, is creating a very compelling landing page, which is a commercial video at the top. And then the aspect of continuing to do outreach digital marketing through your various channels of that, to get as many click-throughs on a daily basis as possible. And then we measure the conversion rate on all that really creative hard work that the issuer will have somebody doing on their team, or maybe an agency helping with that marketing outreach.
Okay, Dave Lee, we heard from Massimo. He was really pushed the idea of content creation, right? And keeping your investors informed of how the deal is progressing. And I know, actually, I'm going to go back to David Blankman, sorry, because I know you have some ideas on I'll call momentum and how important momentum is or has been for the deals that you've done. I want you to speak a little bit about that based on your experience.
Yeah, it's very important that as long as you're planning all the marketing steps and outreach, that you also start looking for a lead investor. And I think in the franchise and franchisee and franchisor world, many times, private lead investors will come in to get a new franchise or property of stores started, or come into the franchisee to help fund 10 or 12 Popeye restaurants in a particular major market. So it's very important that the aspect of this capital raising is clearly understood, so that the issuers have an opportunity to choose the right way to do it.
Okay, and go ahead.
Yeah, and also I think one of the things about momentum is so important. That lead investor, if you ask him or her to invest on day one that the deal goes live online, you actually have a time and a day that you go live. And let's just say they're in for 50,000, 100,000. It creates an impact on the deal offering page, which you have a counter, counts the time, the days the issue's been live, is of excitement for the offering. And especially in Reg CF, we have to establish a minimum and a maximum deal amount on the offerings. Let's just say the minimum is 50,000 and the maximum is $5 million on Reg CF. Once we reach the 50,000, the deal is going to fund. If we don't, which we have a strategy to make sure that we don't, and this is one of those strategies, a few early investors come in on day one and take that out. That's done. And so the other investors that are starting to click through and see the enthusiasm by some investors coming in early. No one likes to be first, right? So you need to have those first investors lined up. And we help with that strategy that David Lee will help at NetShares for getting a potential, doesn't mean we'll absolutely help you find one, some lead investor opportunities or advice on how to find them on your own. And then that literally, that momentum carries through. You'll find that the Reg CF offering that I did in 2018, we took out our minimum of 50,000 on day one. By the end of the first week, we were about $250,000. Of course, we did a lot, and I was pushing the buttons on a lot of this digital marketing outreach, Facebook advertising to create the click-throughs. And then there's a section about week 2, 3, and 4 where it'll slow down and it'll kind of be bothersome to you. But here's the secret. You have a lot of people come in and like the deal and don't invest on their first visit. So what do? Our platform will retarget those potential investors, send an email to them in week 3, 4, and 5. Hey, you didn't complete your investment. Please come back and take a look. So they usually do. And you have a 48-hour notice when you want to end your offering and close it out. Let's just say you've raised $3 million of the $5 million. You want to start, closing the thing down, and then the retargeting emails will be sent out within 48 hours. You only have 2 more days left. let's get on with this and come and make your investment. And if you do all this right, it's all digital marketing, seriously, you'll have an onslaught of investors come in at the end because they're fear FOMO, right? Fear of missing out.
Well, it's scarcity.
That's the experience of that. Actually having been through the experience of that.
You know, that's
Yeah, and I think it's really important just to have that communication plan out there. And at the end of the day, you know, people are going to invest in people they know, like, and trust, right? And so having that communication plan is so important. You know, putting out the videos and even, you know, communicating with them, just, you know, dripping them and giving them updates. You know, just like what Massimo's been doing. And I think that's why he's been so successful with his capital raises, is because he has an amazing communication plan. He's updating his investor community on an ongoing basis, and as a result, they're coming back and investing in the second, third, fourth, fifth rounds. You know, and so, you know, I put yourself in a position where people can get to know you. Once they know you, hopefully they'll like you, and then once they like you, they'll trust you, and then they'll invest in you.
Yeah, I thought Massimo was it was very interesting to follow your point that he was getting people second, third, fourth time around. In the
And you know,
chat,
like Jason Fishman, who runs DNA, that's the digital marketing agency that specializes in equity crowdfunding. He brought up a very interesting statistic in one of his webinars a few weeks ago. He says, you know, it takes an average of seven impressions or 7 views before somebody decides to invest in a particular deal. And so, you know, you want to have those touches, you know, those drips, and you know, the outreach, and just stay persistent in hopes that they'll eventually convert into investors.
well, I'm going to push back on that because I know David Blankman invested in something on seeing it the first time. So,
Yeah, I'm a video. I love moving pictures. I love videos, and when I see a great video that gives me a value proposition that I think is inordinately wonderful, like the Massimo with his Pietro pizza. I actually saw that deal when it was on live online,
yeah,
and I see that pizza maker doing it in 30 seconds, and I go, boom, I'm in. Here's my Visa card, $500. Not even a thought. I don't even read all the fine print below. Right.
I know.
And here's the thing about these offerings, and David Lee's going to have to give me some creative freedom here to say this. These are impulse buys. It's like buying a great.
I was just writing that down. Impulse buys. That's what you're going to say next.
And if you do the landing page right, and you get lots of click-throughs, which is your digital marketing outreach, literally your conversion rate will be much higher than average. And if it is, a lot of those people will invest that $200, $500 within 5 minutes of being on your page if it's good. Otherwise, they'll like it. Maybe the retargeting come back, and you're back and forth about getting them to be live investors. So I like the idea of, boom, let's do an explosion in the beginning. Let's get this thing minimum out of the way. And then all these investors, you know what, they tell their friends, I just invested in this great deal, take a look. And then boom, they start coming over. And that's a side benefit of social media is if you have a list of your social media contacts at Facebook. What I did during our 2018 offering, I would call all the investors that we had on our portal that we could get the phone numbers for. And I'd say, you're now an owner of our company and you love our product. Well, I got a job for you. And they go, what do you mean you got a job for me? So you got to help us now. You're on the team. And I said, what's that? And I want you to do a social media outreach to 10 of your friends on Facebook and include this photo and this link that you invested and you love it. Please take a look. And literally they will do that. And it's just amazing how that extends the reach of getting click-throughs on an offering. Another little secret from having done one. Yeah.
Well, the idea of getting people, I think Massimo mentioned this too, to brag that they're owners, right? It's the
and especially here's the thing. I haven't worked in the franchise industry. I did my first job out of college with the Marriott Corporation, and I graduated from the restaurant university management program there. So I have a little bit of knowledge about restaurants. I'm extremely excited about the franchise group of restaurants and standalone restaurant chains as well funding this way. Because why? You have a group of fans already with your frequent purchase programs and the things I'm sure we're going to talk about later on. So, and the most important thing you have that works so well in this world is proof of concept. Many of the deals that we see on Reg CF all over the United States now literally have maybe a beta finished of their app business, but that's it. And they don't really know if it's going to work or not because they haven't been really testing it with a lot of customers. Bistro is tested, right? It works. You think that's not going to be an easier raise than having a drawing like some Reg CF people of a product as wonderful as making pizzas that way, and it's on blueprints? We want you to invest in us, right? That's not proof of concept yet. So it's proof of concept that this particular channel for doing Reg CF offerings, franchisees and franchisors, that's really powerful.
Yeah, I think that's the Massimo's asked in the chat here that how do you guys feel about the number of offerings on each platform, right? I wonder if I think this is a good time just to follow up on that. What's your thoughts?
I actually like it. You know, I like the fact that more and more deals are coming out. And, you know, people, I think, you know, once they understand investments, you know, in the private markets, I think, you know, from a valuation standpoint, they're probably going to get a much better deal than they would in the public markets, right? And so, you know, I think the more the merrier. You know, I've talked about Reg CF and Reg A Plus and equity crowdfunding to a lot of different entrepreneurs, and you know, it requires a lot of education, right? You know, there are a lot of rules and regulations that are involved, and you know, after like 2 or 3 minutes into it, you start seeing their eyes glaze over, and you know, they start getting distracted, and you know, it's a little frustrating to me because I know the power of equity crowdfunding and how it could be a game changer, especially for the franchise industry. Like for me personally, having been in both equity crowdfunding and in franchising, I truly believe there's no other industry that's better suited for crowdfunding than the franchise industry, you know, for many reasons that we've already talked about. And so, you know, I guess, you know, to answer Massimo's question, having, you know, more deals on these platforms, I think is great. You know, more democratization, more opportunities, the more the merrier.
What about you, David?
I concur. And I think finally, into 5 years in, right, we're seeing the amount of dollars raised and the amount of issuers reaching their maximum raise grow on a percentage basis literally every month since through COVID. It went off the roof. COVID, actually, the COVID year doubled the amount of funding, both in dollars and issuers. I think one of the reasons people were at home on their mobile device. Well, that's e-commerce. Think about it. That's why this is so cool. And I think we're going to see this grow. We're still a tiny amount compared to the, you know, the amount that's funded under traditional angel investor and venture capital private deals. Massimo touched on this, and I'd like to touch on it again because it's so important. Remember, in this area, Reg CF and Reg A Plus, our investors, because of the Jobs Act, are public investors. Public investors also buy stocks on the New York Stock Exchange, right? What's one of their major characteristics? They're passive, right? These are not investors that are going to want a board seat. These are not investors that are going to tell you what to do. I got something I want you to do to change to do your business better. And so here you go, private placement that's passive investors. This is something that I don't think the industry really understands or appreciates enough in helping issuers evaluate this opportunity.
So, and by passive, you mean they're usually, if it's an equity, they're Class B non-voting shares.
Non-voting shares,
Right.
and literally it's like buying shares in Home Depot. You know, you don't have any say-so with the company. You're considered a passive investor. Well, VCs and angel groups are not so. They're going to have agreements in their term sheets where they say, we want a board seat, and Massimo touched on that. And it's so important to understand the freedom of that when also you can determine through your cap table that you maintain the 51% ownership that every founder and every business literally should maintain for their business.
Well, this I think touches on the issue that you just briefly touched on, David Lee, is the better terms that you're going to get from, or better valuation that you can get from a Reg C, F, or a Reg A plus. I wonder if you could speak a little bit more about that, your ideas on that.
Yeah, so the valuations have sort of it's been all over the place, but what we're seeing is really solid, attractive valuations on the part of the issuers by going this route versus, going the route of, private equity or family office investors. And the thing with valuations is, a lot of times it's just an arbitrary number, right? And so you could sort of create, I mean, it all has to make sense, obviously, but um, it's all about supply and demand, and this gives you an opportunity to raise capital essentially on your terms, right? You're maintaining control. You call the shots. If you want to only sell 20% of your company, by all means, go for it. And you know, to David's point, you're maintaining control over that whole situation, and so this to me is going to be a better route than going the other way.
Just because you can set the terms and then use something like a test the waters campaign to find out if in fact um, you've got the supply, right? So
That's right.
tell me, I mean, this is I think a fascinating concept, testing the waters. And I wonder you could explain how that works. Dave?
Yeah, so testing the waters is essentially a campaign page you could put up to gauge investor interest, right? And so, and this is before you start spending the money to actually put a Reg CF campaign together, a Reg A Plus campaign together. You can, by the way, you can do a testing the waters campaign for both Reg CF and Reg A Plus deals. And so you put out a campaign page to gauge investor interest and also to obtain indications of interest from your investor community. And the way they have these testing the waters campaign pages set up now is you put in your indication of interest, and then I think you could even put in your credit card in some cases, and just kind of reserve your shares so that by the time the deal goes live, you'll already have your slot, set aside for you. So testing the waters campaign is actually pretty, is a good way to sort of gauge whether or not you should move forward with it before you spend the resources to put a campaign together. And it doesn't really cost you much to do a testing the waters campaign.
And David Blankman?
Yeah, I concur with that. The cost is lower. I'd say the one thing marketing wise that is still a cost is, remember your Super Bowl commercial video that you're going to do. Sure. That's to be done right. The page has to be built very readable, very simple to understand. And because when you start getting click-throughs, you'll do that also on the Tested Waters campaign. And you want as many votes yes as you can get on that, because it really does gauge. And to back up what David said, it's really best to require a credit card to be kept from that visitor that expressed an indication of interest, because that's a real strong indication of interest. And in my background, it's about an 85% of those will follow through. They do have to be notified within 48 hours whether they can back out or not. But many of these are like, I've done a lot of these myself. I buy these deals and an indication of interest. I mean, it's pretty solid. They're going to go through with the purchase of the stock.
And so what's the regulation? So you do the testing the waters, let's suppose you've got all of these people and you're very happy with the level of interest. What's the next step, Dave? Are there other things that you have to do to meet regulations?
No, I mean, the regulations are not that strict on the testing the waters. There are certain language, there is certain language you have to put in there, but it's very easy to do.
Sorry, help me. I thought there was a Form C requirement that you had to fill in. Have I got that wrong? I thought there was something you had to file if you wanted then to go from testing the waters to something else.
Yeah. So once you decide you want to move forward with an offering, then at that point, the legal counsel, the attorney, would then file a Form C,
I see. Okay.
and then the deal can go live.
Right. And just to go back to, I think, Massimo's questions about the number of the deals, and you guys are very positive about seeing more deals. And do you think that's related to the fact that on the Reg CF now you can raise 5 million up from 1.7, and was there a corresponding raise, Dave, on the Reg A plus? It's now 75 million. Was there?
Yeah. So that went from 50 million to 75 million.
Right. So do you think that the fact that, especially at the Reg CF level, the 5 million seems like a big jump from 1.7?
Yeah, and yes, to your point, I do think that's why you're seeing increased traction in this space. You're very limited on what you can do with 1,070,000, and when you bring that up to 5 million, it just opens up so many more doors and so many opportunities to develop businesses, right? And so I certainly do think that had a lot to do with the number of campaigns that you're seeing out there.
Just because of that, yeah.
Right.
And I wanted to let me just go back, and I had this in my notes here. David Blankman, and this is a sort of compliance issue, that franchisors, as you know, Dave Lee, have to provide for their FDD financial statements. Those financial statements, are those sufficient in general for the financial statements required by the SEC, or will there be more costs there?
I believe it's sufficient. What's in the FDD is an audited financial statement in most cases.
Mm-hmm.
And for a Reg CF deal, they do require over a certain amount that you put an audited financial statement in that deal. So yes, I do think we can use those financial statements for equity crowdfunding.
Right. So that's another advantage franchisors have, that and even a large multi-unit franchisee may have too, that they already
Yes.
have that, right?
And they already have also, in addition to that, all the risk disclosures in the
Right.
FDD, right? And
Right.
so,
I was going to go
I
there.
mean, this is an easy sort of tee up transitioning from an FDD to Form C. You already have the business plan, the risk disclosures, and everything else, including the financials. So it's almost a seamless transition from a franchise disclosure document, a franchise agreement, into a Form C.
Yeah. So that's very valuable for franchisors to know, or development franchise people doing a development deal, that they can use, reuse with maybe minimal changes, something to raise money from the public this way. So I wanted to tie that up, because it was one of the um, things that David Blankman had said. We've got to have this, and I wanted to put up my hand and say we have this.
That's cool.
so
These are the
it,
financials together.
yeah, it's just, when you think of the people that were first out doing the Reg CF, is they're people with prototypes. So
Mm-hmm.
okay, so from your perspective, um, what else should people know about marketing, if anything, as a franchisor?
I'd like to bring up it's related topic, but I think it's very important to point out that the marketing dollars you spend in a Reg CF initially will compound the value for a follow-on raise, like a second Reg CF, and a third, and you'll find out you'll get better at what tools work for you, where to spend your dollars. And here's the wonderful secret of this whole opportunity with Reg CF and Reg A Plus. You can migrate from Reg CF into a second Reg CF. Let's say the first one you raise $1.5 million, the second one you raise $3 million, and then you say, you know what, we can also go into a Reg A Plus after that, continue raising with what? One of your major assets you now have, and that's a group of investor customers, right? And so you go into a Reg A Plus, and then at the end of 12 months on the Reg A Plus, if you choose, you can go public, you can IPO. So this is the migration from these various stages. You're using your main asset, which is a pool of wonderful investors, owners of the company, that will help you find more in round 2 and find more in round 3. And then in the case of one company that I've followed really for now 3 years, the name of the company is Nightscope. And their robot security guard company, a cool idea. They did 2 Reg CFs, a Reg A Plus, and they're now listed on the NASDAQ as a listed exchange company. And there was an exit. You don't think early in stage investors love exits? They do. Yeah. So here you go, this migration to an exit that's available. And we'd have to take a look at the franchisees and franchisors and see if that's something that migration would be good for them.
And Dave, I'll give you the last word on this.
Yeah, no, I agree with everything David is saying. And one of the things we didn't talk about is the opportunity for liquidity in these investments, right? Through an alternative trading system, which is becoming widely more and more available, where, you know, investors in these Reg CF deals or even these Reg A Plus deals, they can liquidate their shares or sell their shares at some point in the future. I think that makes it a very compelling, you know, opportunity, because one of the biggest obstacles in investing in private securities is it's not liquid, right? So if you were to buy shares in some of these privately held companies, it's very difficult to sell those shares. But now, through SEC regulations and these alternative trading systems, CoreConnex, by the way, has you know, quite a few relationships with a multitude of ATSs that can help, you know, provide that liquidity there. And, you know, with Reg CF, you have to wait 1 year before you can liquidate. But for Reg A Plus, you can liquidate right away, or you can, you can trade those shares immediately. So it's a very exciting time for the private markets as a whole.
Yeah, no, this sounds like these are terrific type of investments that mirror what you would expect in the public markets. Good plans, well vetted, and that you can cash out either on the ATS or, as David Blankman suggested, that the entity gets an IPO and that's the liquidity event. So there's a lot of things to think about and chat about. And I really appreciate, and I'm sure our audience does appreciate your in-depth knowledge on this. We're going to now break, and everybody gets to chat now in the networking tables, and you can chat through audio and have a more detailed conversation with the people that you want to talk with. All right.
Well, thank you,
Thank
Michael.
you, Mike.
Thanks,
Appreciate
guys.
you
Really
having us
appreciate
here.
it. Thank you.
Thank you.
Bye-bye.